TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Yes, I do. Hi, everyone. Basil Chapman here, Tiger Technicians Hour. Sometimes you have to go right to the wire, and I have to thank Kathy at Hotcom and Dan, my computer man. I think we got it. Whew, to the second. So, welcome. This is the 12th of August. The Dow is down. Let me just go to the Dow right now. INDU, there it is. The Dow is down 265 points at 26,021. The S&P at this particular time is down 24 at 2894. The QQQ, the NDX 100, is trading down 1.11 at 185.36. The IWM, the Russell 2000, is down 1.53 at 149.09. This is going to be a very important day. Look, gold. Gold is up $8. It is stuck in this little upside rectangle because it formed that beautiful base between 1455 on the 25th of May, and it went down to, I think it was about 1380. Then it formed that rectangle formation, popped out once back on the 19th of July, went to 1467, went back into the rectangle. But because of this international concern, gold is now a factor of fear. And because of that, it is rallying very nicely. It has formed a high-level consolidation, and there should be a pop to a leg D at least above. Oh, this is going to be the next issue that I have to deal with. 1484, I think 1484 can't be right. Let me just check here. 1522 is going by real quickly. 1522 is the resistance level. Going over that starts leg D. It's a leg D in the weekly chart. Let me expand that so that you can see that there was a high-level consolidation. There it is, and pop. Once again, it's up. And a leg D in the monthly chart. But wait a minute, silver is also participating very nicely. It is up 1.10 at 1703. It hasn't gone above the high that was made 4 days ago. I wonder if I can get that if I can read it quickly, 17.26. And that's going to be an issue because once it gets above that, if the combined gold and silver metals are going together, breaking out, then the 200-period exponential moving average is going to be the resistance, and that's very close. That is, I'm just trying to get rid of something. There it is, at 17.36. And at that point, I wouldn't be surprised if you start chopping around a little bit above, a little bit below, and we'll see if there's another high-level consolidation. The monthly chart in both gold and silver are doing very nicely. Wait a minute. Gold has rallied very sharply, and you would expect that the dollar, why do I keep typing it? I have to get used to a new system here, so it's going to take me a moment. So we've got DXY. There it is. The dollar is only down 14 pips at 97.41. Holding well. You would think that the dollar would be down in the 95s because you've got to separate these factors. Gold is an international instrument of safety during times where there are issues that are not just geopolitical, but geoeconomic political. And that's what you've got right now. The dollar, as far as I'm concerned, is really representing the United States, the currency of the currency. That is the status of the dollar as being the premier currency to hold. And I think that reflects very favorably so far on the United States, the economy, etc. Now, what we're looking at is that the TLT, that is bonds, have rallied sharply. They're up 2.11. I mean, these 2.3-point rallies over a day or two in bonds. I mean, this is unusual. And you've seen the gaps to the upside. Yes, we will fill those at some point, but not just yet. So at 142.17, we're looking at the left side high of 143.63, was that? 143.62 back in July of 2016, pulls back to, it doesn't pull, it drops to 111.90. That was December, I think, of 2018. And now it's back. It did the other day. It went to 143.06. Will this become a double top? Will there be a breakout? Those are the questions. They're very important questions right now. Let's go to, there we go. Now let's go to something that I think is also very important, because I spoke about this for my subscribers to my opening call over the weekend. First of all, you've got high-grade copper down at the lows is at 2.58, but wood, which is the international, this is the timber and forestry ETF, has had a really weak couple of months. And it's gone from a high of 83.88 in June of 2018. Just over a year later, it's trading at 53.95. That is not a good sign. That's international. It's in a leg D to the downside in a monthly chart. So we're going to watch this very closely. A couple of things that also bear just looking at right now. If you're looking at wheat, wheat is trading in the lower range. It had a spectacular move from about the 420 area up to the 557s, pulls back into the 480s, and now it's trading at 485. It's down 13.6, 30 and 3/4. This is tough stuff, especially if the dollar is not acting strongly. Why would wheat be not reciprocating by actually rallying? And soybeans down 4.5 at 887. Not bad action, but still at the lower part of the range over the last few weeks. And if you go to corn, let's see. Yep, corn is down very sharply. Corn is down 23.5 at 386, breaking key support levels. Not good at all. Crude oil earlier on when I did the show with Tommy Jr., I was doing Larry's show this morning, is up 24 cents at 54.74. Now, I think that this is stuck in a range. And what's really important about it, unless it takes out 50 key support level, if it takes that out, it's going even low. But right now, I think it's stuck in a range between the 50 area and 56.5. We'll see what happens after that. But in the meantime, sideways range could be in play right now. The IYT, and I spoke about this for quite a couple of months now, I've been saying that the transports are pulling back. It's all very well to have them pulling back, but I want to see what happens in the, I'd like to see the transports moving together with crude oil. Not sure, they don't have to spiral to the upside. I want them moving higher with the Dow moving higher. And at this particular point, we do not have that. I believe we've got a break coming up. So Basil Chapman, Tiger Technicians Hour. I'm trying to juggle a whole bunch of things here, and nothing's working. Anyway, that's how it is. I'll be back straight after this very short intermission, and we're looking at a Dow down 233, S&P's down 20. Basil Chapman, Tiger Technicians Hour.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. Tiger Technicians Hour. Dow's down 248. S&P's down 21. This is going to be a tough period right now. So a couple of questions I had. Let me just run the, how can I do this? Yeah, let me just run them in order. A question about the VIX index, VX.X. Right now, the VIX is trading up 1.64 at 19.61. Let me just go through my, I lost that. I have to redo this. Sorry, folks. Let me just do that. They've got it there. This is not an A. This is A. I'm trying to put my notations in. I lost it because through the weekend, because I did not know there was a computer problem until Thursday afternoon, Thursday evening into early Friday morning. I was losing data, so I have to renotate some of the charts that I had done before. So what we're looking at is that the VIX index trading in the 19s usually implies up in the 18s to the 21 area. It usually implies that you're going to get a triple-digit down close. That's number one. Number two is when it starts to go into the 20s, that's where you can expect some kind of sharp reversal. Look, each time, I don't have the notation there, do I? Yes, I do. So 23.38 was the high that was made back on the 10th of May. And then you had the spike last week that went to the 24s, pulls back, and now it's at 19.50. The big question is, are we now looking at higher highs and higher lows until we get a climactic turnaround in the VIX index? My thinking here is that we don't want to get kind of, you don't want to embrace this whole negativity. You want to also be able to look and say, within the context of selling day after day within a trading band, holding around about the 26,000 to maybe down a little bit lower than that, but constantly bouncing back up again. We made a low of 25,440 just recently. Now you are 100 points, just about 800 points higher than that. But every time there's been a rally, it hasn't been a breakout rally. It's been a rally that just bumped into resistance and you came right down. Even last night, I had a Chapman Wave trend gauge reading on Friday that suggested that within 2 sessions, there should be a 9 to 11 point rally in the E-mini futures, which should help the down the S&P. Well, last night we got that. We got a really nice, we got a pullback, then you got a nice sharp rally. And all of a sudden, overnight, lower and lower and lower and lower. And then this morning, there was just a little bit of an attempt to rally. And then, boom, selling comes in. It's not breaking key support levels, but it is intense selling pressure. And that's going to be the issue. Are we looking at a sideways digestive phase? Or is this really the start of a much deeper correction to the downside? That's number one. Number two is, within that context, what is working and what is not? Well, you have something like the REITs, the IYR, which is the US Dow Jones REITs index. This is the commercial REITs, commercial property that gives you dividends and it gives you capital gain if it keeps doing this. And look, you went to a leg E in the weekly chart. You've got a monthly chart still in leg B. This is good action. If you look at the XLU, oops, you can't do that. If you look at the XLU, well, first of all, let me just say I had a question about what about that PLD that we had? PLD is Prologis. We took really nice profits in that on the way up. We got into the 75s, took profits at 80, 82, and 83. And then the final one was back down. I think it was at about the 80 level. What we're looking at now is that we chose to go into a different one, CCI, which is Crown Castle Core REITs, and it's doing really nicely. It's even up to, it's up 0.86, up 0.61% when the general market's down. That's going to change soon, but I think first we have to get to at least a leg D in CCI, and then we're going to start looking to see what is happening. Is the TLT about to take a bit of a breather on the upside and have a rest? Sorry about these flashing little signs all over the show. I haven't resolved all the problems here with this new setup, but I'll get it done. It'll take a little while. So yeah, the REITs are working. The XLU, which is the utility index, XLU is down 9 cents at 60.77. It's acting well, but probably not as good because utilities is a different function. Of course, utilities are just that. They're utilities. It's a general public, electric, water, etc. So in a sense, they've done very well. But I think it's the REITs that have the edge because they have a chance of greater capital gain. Now, I could be wrong, but that's the way I'm looking at it. Now, other thing that we need to look at is I had a couple of questions. Let me just go to so the GDX hasn't taken out the high that was made 4 days ago at 30. Was it 30 or just under? Oh, am I going to get this flashing sign? Let me just see. All right, let's call it 30, right? I think it was around number 30, but I might be wrong. Trading at 29.62, close enough, high-level consolidation. Do we have another quick pop? If there's another quick pop, I don't think this is a G. I think this is a new leg C, and that says it should go to a D. And at that point, we'll start to see whether or not gold is very close to some kind of a pullback. Oh, this is going to be terrible, that interruption of the time flashing across there. Now, here's another thing that I want to look at. Within the context of the overall market, what are the financials doing? This is the XLF. The XLF, now what is that? Oh, that's my time. Now it's down there. Very good. The XLF is trading S&P Select Financial Spider, trading at 26.81, down 36 cents, holding okay. Not great, but holding okay right around this. You remember the 200-period moving average? You go above it, you go below it, you go above it. You can't hang around there. This is like a magnet. So we're looking at that 200-period moving average of 27 as being a key factor. If the XLF this week, I'm not giving you a day, I'm just saying give it the entire week, starts to trade, first of all, underneath the low that was made on the 7th of, can it flash one more time so that I can actually see it? It's just very difficult to see, I'm sorry. No, I can't see. This low, there it is. So if it flashes under 20, if it closes under 26, that's a warning to say that the financials are now starting to be impacted by this general market. And if that's the case, I'm just going to say to you, now we have to be a little bit more careful about all the different sectors that we're looking at, because the upside flourish that should have taken place, that was let me skip the XLF. Let me just go to the broader NYA.X. That's the New York Stock Exchange. If I can just type it in right here, dollar NYA.X. There we go. NYA.X. Finally got it. Having made an all-time high in January of 2018 at 13,635, and then the spectacular low at about, did I type that in? No, now do I have it? No, I don't. Oh, I lost all that information. Well, we'll see what it is. Let me just see if I can scroll all the way to the left to December. There it is. There it's coming up. Yeah, of 10,723, a 31% decline. Has had a decent rally. It had a really good rally to the 13,255 level in July, but now it's given quite a chunk back. So this is an issue because the broad 2000 stock, New York Stock Exchange index is saying, I'm having a tough time here. I'm not finding leadership. So I'll be back. I'll talk about it in a moment.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. Basil Chapman. Dow's only down 213. I say only because this is what's been happening consistently. There are buyers out there. There are sellers on bad news, but there must be people out there looking for bargains because every time the Dow's pull back, there's been buying. I suspect it's about, what is it? This is not even mid, but yeah, we're getting close to mid-August, right? I suspect it's kind of a little later, maybe in about 3 weeks' time. Maybe that's where we start to see the breakout to the upside or the breakout to the downside. at this particular point, there are so many factors that are going into both the nervousness part of it and a lot of the information we're getting about the oversold, or at least the number of shorts, the number of bearish newsletters. A lot of that is suggesting that there's a cushion at the bottom, but it doesn't mean to say you can break out to the upside. And you know, when I go, so the New York Stock Exchange, look, this is not a great chart pattern. It'll be a much more positive one if it can start to break over the 14-period moving average daily at 12,853, go to 12,900 over the next week and a half, 2 weeks. That'll be impressive. That'll say, hey, this is starting to move a lot better. That's number one. Number two is when you're looking at all these different aspects, let me just look at this is CTAS, this is my cash index. CASH is those are the symbols. Cintas is the first one. There's overalls, uniforms, rentals, actually up 49 cents today, almost at an all-time high, made an all-time high on Friday, just at about 2.4. Oh, I keep getting these different signs here. I'm going to have to work on that all day. What am I looking at here? 266. 266 was the high. It's trading at 263.92. That was on Friday. It was the high. This is good action. Leg F could be a recycle in the weekly chart. At first, I was really nervous, saying, you know what? If Cintas pulling back 2 weeks ago was a sign that there's going to be some rotational corrections going on in the market, that is in the economy, then I'm going to watch this closely. Then out of the blue, bam, it just skyrockets to an all-time high. I like that. Wait a minute, Amazon trading right now down 7 at 17.99. 2050.50 was the all-time high in September of last year. It drops very sharply to the December low in the 1200s. No, I think it was 13 something. I had this note date. I have to write it in again. 30. All right. Don't mess me around. Please do this nicely. 1672. No, that was the June low. Oh, there it is. 1307 round number low. I remember there was a round number back in December, and then it scurries all the way back to the upside. It goes to just under 2,000, and now it's trading at 1,800. High-level consolidation, not bad. So SPY is the third one. So CAS, SPY, is the letter that corresponds to the S, and that's coming off a low. It went from a high, all-time high of 302.23 down to the 200-period moving average just below it at 281, rallies up to the 14-period moving average 3 days ago, now is quite sharply under it. It's struggling, and this weekly chart really looks like it's a peak E that's going to have to start a brand new buy signal to buy mode. That's the way it looks right now. So that's for S, and H for the cash part of it is Home Depot. Home Depot is coming off the all-time high, and that was 215.43 was the high back in 2018, pulls back to the December low in the 150s, scurries all the way back to 219 on the 15th of July, and now it's trading at 204. It's not a big deal, it's 12 points, but hey, it's near the highs. So I have to look at this as a rotational correction, and that's really important. Now, let's go to a question that I had here in the den, which was, could I look at, was that AG that you were looking at? That was the question. Yep. Could you look at, darn, I'm missing that. All right, let's see, I think it was AG. AG, is that AG? Yeah, AG, would you buy, what was the question? I have to find it, it's right over here somewhere. Maybe ask the question again, but it was about AG, I remember that. And what we're looking at is First Majestic Silver Corporation, trading at 11.09, a recovery high, hasn't been this high since, wow, this is amazing. Since it made that peak way back in August of 2016 at 19.15, it's gone all the way down to the 4 or 5 area. I think that was 4. It was 4.59. Now it's in leg B. This is really good action. Now, one of the things I've got to keep noting is that when these gold stocks actually take off like this did in 2016 from January, around about 3 or 2, it screamed up to 18 in one leg. So I cannot dismiss this. So I'm going to say, because Peaky in the Den, your question is pertinent in that you are prepared to look both short-term and long-term. I'm going to say to you, this is in play. And as a result, yes, you could expect a pullback at any point, but if you got in right here at 11.10 and treat it as a trading position, this is not your real position because I know you've got other positions, but if you treat it as one of the family of gold stocks that you've got, gold and silver stocks, it's in leg C. I'm going to call this leg C for the moment. I'm going to say, yes, I like it. On a short-term basis, I personally would put a stop in. You might not, but I'd have a stop. It's at 11.10. If I'm already seeing gains in the gold stocks and silver stocks that I have, I would then put a stop in of 10.10. So it's a 1-point stop. It's a pretty big stop, but only for 2 days because I don't think it's going to drop that sharply if it turns around. And what I you expect to see tomorrow in my opening call. You know, I've been missing on these gold stocks. I have to admit it. I'm sorry. They move so quickly and so well. And I was still looking at the dollar, and dollar's held very nicely, but I should not have mixed the two. They're two separate entities entirely. Yes, it is looking good. So at 11.10, I'd start a position there, and that would be a new position if you have other stocks. If this is the first time you're in the gold area, there are probably other ones. This is a good stock, but to have a move from the 8s into the 11s, I don't think you're looking at the 11s to the 16s in this move. I think a little later on, maybe. So, yeah, I'd not get carried away, but you could start a position 11.10. In this case, I still would have a fairly big stop just to start with. And then if it can get to anywhere close to 11, so it's 11.09, if we can get to the 11.23s and still only be in a leg D, that'll allow us to put in a stop that's a little more reasonable. All right. Question I had here, where did it go? I'm going to turn around and see if I can get this done. Yes, and there's a complaint from a subscriber. Gold trades on fear, but Tom's volume system seems to work very well as a technical trading. Absolutely. Congratulations, Tom. I'm going to say that, yes, I will look at gold. Oops, it just disappeared. Here we go. And I'm not going to ignore it, but this is a little high to be getting in, I must say. All right. Dow's down 233, S&P's down 18. I'll be right back. Basil Chapman, Tiger Trading Zone.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South Africa, African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back, and what we are looking at is a situation where some stocks, especially some of the IBD, Investors Business Daily top stocks, are just really, they don't want to give things up. Others that you would think would be doing very well are suffering. So SEDG, SEDG, which is Solar Edge Technology, Inc., trading in huge legs C in the monthly chart, huge legs G/C, probably looks more like a C than a G in the weekly chart, and a D in the daily, up 5.53, up 6.71% on a day like this at 87.86. I think solar is finally, not finally, but for the last really quite a while, a lot of the year 2000 has been doing very well. Many of these solar stocks, it's in play. I think it's, even though crude oil is not an issue, and I had a question about the crude oil. Let me just say that one of the reasons why I personally wouldn't be short, although I know someone's asked me about it and they've been short for quite a while and done very nicely, it's just that geopolitical risk, very much like gold, crude oil, anything can happen in the Middle East. So that just makes me a little nervous. But just in terms of what you're looking for, you want to see today's Monday, the very beginning of the week, crude oil is up 29 cents. It's a continuous contract at 54.79. You really want to see something like a sudden, doesn't have to be news related, but just a sudden slide under 52. That's it's almost 3 points lower. And if it does that, then I'm with you. Then I think that crude oil could go down, not that much more, but it certainly could go down to test the 49s. But at this particular point, it's a tough one for me. I just don't see it as a trade just right now. And what you're really looking at is this trend line. If I can draw it in there. Okay, this trend line resistance, which comes in at 56, is that 57 or 56? It depends when it is. So in this week, it'll be between 57.30 and let's go all the way to Friday and 57. So anywhere above that 57.30s is very good action. But that's the way I'm looking at it. Now, the next thing I had a question about was I did the XLF, which is the BKX index. Would I look at the IAI, which is the broker iShares US broker dealer and security ETF? Yep, it's down quite sharply. It's down at 1.02 at 62.54. This is it's holding the 200 period exponential moving average. It could do an H pattern and do a retest of the 6160s. We'll see. This is going to be very important because absolutely now it's starting to look like a peak F in the weekly chart, but the week has still got 5.5 days to go. I am anticipating that there's going to be a lot more shaking out of rallies that try to succeed and then they pull back, and then some of the very sharp declines. We'll see if all of a sudden over the period of the week, if the rallies do not stall, if they continue going higher. 28. All right, so this is ABC. There's a leg C in pins, which is Pinterest. Oh, Pinterest, trading at 35, round number, 157 up 157. Very nice action. Hey, this looks like it's in place. I'm going to put it in as a note here. PINS, question mark. I'm going to have a good look at that. Next one we want to look at was, let's go. So I also want you to do this, my Dow Quartet. Look at this, Caterpillar. Down 234 at 117.04, down below the 200 period exponential moving average. IBM, down $1.44 at 134.71. Triple M, holding quite nicely, just down 64, but it's been horrible. 259 was the high in 2018 in January. It's like the New York Stock Exchange didn't make a new all-time high in 2019, and then plummets down, and we're in the low area, in the 162 area. 159, 158 has been the most recent low. Oh, this is just terrible. Let's see what UTX is doing, which is going to amalgamate with Raytheon. Down 2.29 at 128.95. So you can see even my Dow Quartet is showing just no signs of strength. So this, as they say in a vernacular, this gives me pause. And no, not kitty cat pause. This just gives me pause and says, you know, it's just, we've needed a digestive stage after that spectacular move in December to the April high. Then you had a pretty sharp 7 depends which index, but about a 7% correction, a pretty good bounce, and now we're doing the big test. And that's going to be the issue. XAL, what's the XAL doing right now? Is the airline index, ARCA airline. Whoops, just made a lower low. It's broken the trend line support in the weekly chart, trading at 97.03, down 258. Now you can see why we're looking at gold. Now let's look at ASA, which is one of the gold stocks that I always like to look at. This is leg C in the weekly chart, leg C in the monthly, holding very nicely at 13.27. This is very good action. So let me just put this in F/C for the weekly chart, F/C. Hey, very nice action. And yeah, up 22 cents at 13.27. Now, within the context of stocks like a Lyft, Lyft is trading down 225 at 56.87. Like Uber, these IPOs, there's a lot of work that's cut out for them to be able to form some kind of a base to keep moving higher. So this is down 243 at 37.48. I think that's an issue. Had a question about Roku. Roku's done fabulously. What was the question? Action. Bob has said something about that. Yes. So Roku's trading up 9 at 135. Leg C in the daily, leg F in the weekly, and only a leg C in the monthly. This is in play. I berate myself because Roku has been one that was on my list. It was brought to my attention. I think my son brought it to my attention, and there's just so much to do, so many things to look at. I just gave it a miss. But it is in play, and I know that we once had Roku. I couldn't get it to work. Just let me be blunt about it. I couldn't get it to work. I knew my children would be able to get it. I think my son gave it to us as a gift. Son took it back. Son used it. Us old fogies, it was a little technically, it shouldn't have been, but I figured out afterwards that it was probably because I still had my 1990s Sony TV set, and you couldn't plug it in any way you wanted. So that was the problem there. But Roku's spectacular. Look at it, up 9, up 7.5%. This is excellent action. It's in play. So anytime you get a pullback, let's say it starts in 2 months' time, we're looking all of a sudden it's filling the gap of 115 to 111, not to within the next whatever it is, number of weeks, is filling in the gap. Just give me a yell. Let's look at it together, because I think that it seems to be doing well. People must be liking it, because otherwise it wouldn't be trading up 9 on a day like this. I'll be right back. Basil Chapman coming for our final section. Here comes the break. Stand by. Dow is down 257.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, we're back, and Tim wants to know, Basil, I'm in again, and SH, that's the 1-to-1 short, the S&P, the SPY. Should I add, sell, or hold, and where would you put a stop? Have the best of days, Tim. So, Tim, what I'm going to recommend in this particular instance is, let's talk about the stop for the moment. Some part of the position, I don't know where you're in at, but the low that was made, am I 20? I need an exact figure. Give me a second. 26.63. Okay. So at this particular point, the low that was made 3 days ago, 26.63, that must not be, if that's taken out, this market is going to go quite a bit higher. But I think that just for the short term, that's going to, no, I should say that if it's taken out, there could be a decent bounce. But at this particular point, I think you're in the right position. And I'm just going to say to you, one part of the position could have a stop round about 20, they couldn't have been 26.66. Yeah, round about 26, it's at 27.04, 26.83, 82, one little part of that position. Try to have a stop at the 26.50 area. Just for now, we'll deal with it again tomorrow. But I think you're in the right position. I've got a feeling that the selling is, you might rally, but there's a good chance that we have to do some more testing of the most recent lows. That's the way I'm looking at it. So that's the one thing. The other thing I wanted to ask, I had a question here in the den of, could I look at IEP? IEP I recognize immediately as Carl Icahn's stock. I remember when Carl Icahn was making a huge fuss about everything, his stock was actually down in the doldrums. It was all this way down right here back in 2015, 16. Remember, we got into the thing with Ackerman. So it drops all the way down to the 42 area, rallies to about 80, fabulous move into 2018, pulls back to the 200-period moving average monthly at about the 53 area, then has a very good rally. But I would say, hold on, I wouldn't do anything. It's in a rectangle. Give me a yell when it gets to 68. It's at 71.30 right now, down 3.83, made a peak E-top in the daily. And the weekly looks like it's got a sell signal in place. So I'm just about to hand you over to Steve Rose, then Dave White, and then Tom O'Brien. Have a great day. Check out my opening call, my daily newsletter, and I just wish you a best of everything. And yes, thank you for the computer advice. Dan is fabulous. It did work for me earlier with Kathy from Hotcom. We'll get this organized. It's just updates. I just needed to get everything organized